National income, written as a formula, actually amounts to something called net national product at factor cost, or NNP at FC. But before getting into the calculations for national income, there are certain basic formulae which we should all keep in mind, which makes solving numericals for national income easy. So the first one you need to keep in mind is that gross minus depreciation is equal to net. Similarly, domestic plus net factor income from abroad is equal to national. Now, when we talk about net factor income from abroad, or NFIA, net factor income from abroad is factor income from abroad, minus factor payments made abroad. Now, when we talk about factors of production, we think about land, labor, capital, and entrepreneur. Factors of production owned from within the country, located abroad, sending us back factor income in the form of rent, wages, interest, and profit are added. Factors of production owned by foreigners, or foreign-owned factors of production located within the country, sending factor payments back in the form of rent, wages, interest, and profit are subtracted. Now, going forward, we also need to calculate the factor cost in terms of GDP calculations or national income calculations. So, when you think about market price, the market price of a product is the cost of production plus the profit component that a company wants to charge, a business wants to charge, plus taxes. So if you want to move away from market price towards factor cost, which is nothing but the costs of all factors of production used to make a particular product or service, we need to undo the effect of taxes. So to move from market price to factor cost, the first thing you need to think about is tax, or to be more specific, indirect tax. Now, when you think about indirect tax, you pay an electricity bill, you buy any product online or from a retail store, you go to a restaurant. Your bill will consist of how much the business is charging you plus GST. Now, goods and services tax is an example of indirect tax. Customs duty, excise duty are other examples of indirect tax. So when you think about indirect tax, it adds to the price of the final product. In order to go back to factor cost, in order to isolate factor cost, you need to subtract indirect tax. But there's another item as well which needs to be considered. Think about the fee for a course at Mumbai University's Kalina campus. You think about how much it costs to go to an IIT and IIM and compare that to a Harvard or a Stanford. Think about an MBA in the Faculty of Management in Delhi University, which is hardly a lakh compared to 50 lakhs or more than a crore if you go for an MBA abroad. Why is it so cheap? And it is cheap because the government has gone in for what you would call a subsidy. So subsidies also affect the final price of a product. You think about fertilizers perhaps are subsidized, education is subsidized, healthcare should be subsidized. So if you want to find out what the factor cost is, yes, you do need to subtract indirect taxes, but you need to add back subsidies as well. So what's subtracted from the market price is what we call net indirect taxes, or NIT. And the formula for net indirect taxes, net indirect taxes, is equal to indirect tax minus subsidies. So now you have your basic formula in place to solve any kind of national income sum, and to be able to ultimately make use of the knowledge you have earned here and reach the national income or net national product at factor cost.